Hello everyone, I'm Dr. Jack Mitchell. I'm the founder of Seniors Making Five Figures. It's an organization that helps folks 55 and older earn some extra income. Today I'm with a very good friend of mine and a professional that also is involved in helping seniors. So I wanted to invite Mike to come here and share a little of his knowledge and his insights with all of you. So Mike Ciardi with Retirement Funding Solutions.
That's right.
Tell the folks, Mike, a little of your background and a little bit about Retirement Funding Solutions.
Sure. Thank you first and foremost for inviting me, Jack.
My pleasure.
Appreciate it. My background is basically started in banking, left banking, got involved in consulting to banks, had my own consulting firm, and now that I'm getting of the age where I had to consider retirement, I started studying the whole retirement picture. Mm-hmm. I had gotten involved in doing conventional mortgages for about a decade, and as I delved more and more into retirement, I realized how complex it is for me personally, and what a problem it is for most of us my age. So I actually switched what I was doing, and I work exclusively with people with a solution that'll help people entering retirement and hopefully have a more successful life.
Mike, tell the audience a little bit about what you've discovered as you've studied and researched this whole concept of retirement. There's some really kind of disturbing facts facing the senior population today. Share with the audience some of the issues that you've kind of uncovered.
Well, first, let me say that I know some of the people that would be viewing this are not of retirement age,
good point.
And they're not thinking about retirement right now. But there's probably three good reasons to listen to what I have to say. Hopefully, the information will be important to them. Number one, they certainly might have relatives or family that is either entering into or currently in retirement. Mm-hmm. If they do have family or friends or relatives in this in retirement, retirement that's not going successfully can put a real burden on the family, either emotionally or financially. It adds a lot of stress, and certainly the younger generation may be stuck with trying to support their relatives, their parents.
That happens frequently, doesn't it?
It does. It does. And this is not something anybody necessarily plans for, as they're trying to make their own way in life with their own family. And number three, at some point they're going to retire. So they really need to understand and know what the landscape is and how much it's changed recently. It's much more complex. As I continue to talk to retirees, there's four major concerns they have. It's basically fears. One is longevity. Am I going to outlive my money? Yeah. Number one, am I going to have money for my basic needs? It's lifestyle. Do I have enough to sustain my lifestyle? A lot of people say to me, well, it's okay. There are programs out there. If I really run into trouble, there's Medicare, there's some other programs. Mm-hmm. Once you go on those programs, you basically surrender your lifestyle. You're in the hands of others, and you're certainly not going to live the life you would like to lead in your final years of retirement.
That doesn't mean luxury. It means just having a decent lifestyle that you're used to.
Exactly. Just a decent lifestyle, as you wind down, as you get older, just being able to perhaps live in the same home that you lived in is a great comfort. I know it was for my mother. Yeah. And and number three is liquidity. Emergency needs do pop up. Unexpected expenses. Are you going to be able to have access to cash when you need it? And that's much more difficult if you're on a fixed income. It's not like you can run down to the bank and say, hey, I've got this income, I've got this property, give me a loan. Those opportunities are going to be less and less as the older you get.
That's correct.
And certainly you might be creating some tax consequences depending upon your situation. So that's a problem. And lastly, legacy. Are you going to be able to have something left to leave your heirs or your estate? So those are the areas that really are the most fearful for retirees. Statistics show that Americans are really woefully ill-prepared for retirement. there's good news out there and there's bad news. And the good news is we're living longer, and the bad news is we're living longer.
Yeah.
So we're looking at 30 plus years of retirement. That's a long way to go.
With the diets that we have today, with medicine, what we have, you're absolutely right. People are living longer and not always happier lives.
Well, I know that's some of the things that you do, Dr. Jack, and we appreciate your efforts in that regard. The U.S. Census Bureau says that 11,000 people a day are turning 62. And so that's that baby boomer generation, the generation that was born between 1946 and 1964. And this 11,000 turning 62 a day is going to continue for another 20 years. Last century, between last century and the year 2000, so between 1900 and 2000, life expectancy has grown in this country by 6 years. So the average male lives to 77, the average female lives to 83. If you get that far, 25% of the people are going to live to 88 as a male and 92 as a female, and we're going to have more people reaching 100 than ever before in history. So, there's a long period of time that you have to have concerns for your expenses and your ability to have money to live on. People are cash poor and house rich. Mm-hmm. That's what we're seeing. The average retiree has, I've seen different numbers. They've ranged from $65,000 in cash to as low as $29,000 in cash. But they do have approximately $190,000 worth of housing equity.
Okay, so the cash that they would have available is relatively limited, but they have a significantly more equity, if you would, or potential cash
in their home.
In that house.
In their home.
Okay.
And I'm going to get to that. A recent statistic is that 40% of retirees are living solely on Social Security.
Wow, 40%?
40%.
I did not know that.
The average Social Security check in 2016, is $1,341 for a single person, and $2,212 for a couple. Now, I don't know about you, but if you figure it out, that's not a lot of money to pay for food, housing, medicines, and health care.
That doesn't put much gas in your, leave much room for gas, or going off for dinner, or giving to charity, any of those things that many of us feel are important.
No, that's off the table.
Wow.
I found something very interesting. There's a commission, a bipartisan commission, a blue ribbon panel of former heads of the Social Security, Medicare, Congressional Budget Office. They just issued a 146 report about 2 weeks ago, and they're called the Commission. I'm going to look at this Commission on Retirement Security and Personal Savings, and they had some thought leaders from the private sector, and they looked at a whole bunch of things that need to happen for people to have a successful retirement. And among them, the big thing that came out of this was by 2035, Social Security trust fund will be gone. It's gone. And by current law, Social Security cannot pay out any more than they take in. So based on the demographics, unless something changes, Social Security would have to be cut by 23%. That would be devastating to people that are solely, that 40% that's solely on Social Security. They said that 57% of Americans, their budgets and their savings could not support an emergency or financial shock. 55% of Americans, and this is all Americans, are living paycheck to paycheck, and 33% have no savings whatsoever. So if you thought about all of this, and I'm not trying to be
That's scary, isn't it?
Yeah, I'm not trying to be the one that scares people, but the one thing that this commission came out with that was important, is to say that all of the things that they're suggesting to our Congress and administration involves legislation. It involves changing our lifestyle, our habits, all the things that are ingrained in the way we live our life, so that we can support ourselves in retirement. The one thing that they did suggest is something that's here right now, nothing has to be done, and that's the employment of housing wealth, unlocking the money that's tied up in your primary residence and using that for retirement purposes. And I'm just going to read you, and I have it in my notes here, I'm going to read you what they said. Housing is an important form of savings. Americans own more than $12.5 trillion in home equity, a sum that rivals the $14 trillion that Americans hold in retirement savings. For individuals or couples who own their own residence, home ownership can be a major source of retirement security. Mechanisms exist for tapping home equity to fund regular consumption needs in retirement. And that's what I'm all about.
Yeah, that's an amazing statement that there's that kind of money tied up in home, they call it housing wealth. Housing wealth,
yeah.
Tell us a little more specifically, what does that mean, Mike?
Well, basically, this is the portion of the value of your primary residence that isn't encumbered by debt. Although many more seniors are carrying mortgages into retirement, which is kind of a negative thing if you consider you're living on a fixed income. To pay interest and make monthly payments just goes counterproductive to having enough money to get through retirement. So basically, that's what brought me to getting involved with retirement funding solutions. And the solution we're presenting here is the home equity conversion mortgage.
Do I have to own the house outright, or can I be paying mortgage on it, Mike?
Well, you can certainly, we certainly can deal with a situation where you currently have a mortgage on your home. The requirement is when you do the home equity conversion mortgage, it has to be the first lien, so we will pay off any existing debts, so you'll stop having to make mortgage payments. Let me tell you a little bit about the home equity conversion mortgage.
Yeah.
This is a federally insured program. It was signed into law by Ronald Reagan, passed by the Congress in 1988. As it's administered by the Department of Housing and Urban Development. As I said, it's federally insured by FHA. And what does that mean? It means that in the event your house is not worth more than what you owe on the mortgage, insurance steps in out of an insurance pool that the FHA maintains, pays the lender the shortfall, and also this loan is non-recourse to your heirs or your estate. And that non-recourse feature is huge. If you had a conventional mortgage, as we saw in 2008 with the housing bubble, when it burst, people were so much underwater they couldn't pay off their loans. Their house wasn't worth it if they tried to sell it. And the loan basically has to be paid, even if they passed away, the loan needs to be paid out of the estate money. So there is a deficiency judgment that's placed upon the estate, where with the home equity conversion mortgage, the insurance steps in, the lender's whole, the family's not burdened with a deficiency judgment, so there is more there as a potential legacy. The taxpayers aren't burdened by making these payments because this is a self-funded program, so don't feel it's an entitlement. It's not, taxpayers are not burdened by this. And the best part about this home equity conversion mortgage, again, aside from the fact that it's federally insured, the fact that it's non-recourse to your heirs, is you never have to make any mortgage payments. And I know it sounds too good to be true.
It sounds amazing, yeah.
I've done this for myself, okay? The other thing about a home equity conversion mortgage that people don't realize, and this has been, these are changes that have been made recently, and that's why we call this the new home equity conversion mortgage. We've done things to bolster the insurance pool to make sure it's solvent in case we have another problem. We've added some financial analysis to make sure that people aren't going to get this mortgage and find they're going to be immediately in trouble. They don't have the means to really pay their taxes and their insurance and their upkeep on their home, which meant that, you know, if they stop paying their taxes, what's going to happen? The municipality is going to come in and they're going to put the house up for tax sale. And this happened in the past. This is what's given this mortgage some of the negative perception it has out there, because people got themselves in trouble. And the third thing that's happened recently is that we have put protections in for the non-borrowing spouse. Essentially, when someone does a mortgage and they're the only ones on the loan and they pass away, the mortgage gets called. I mean, that's standard stuff since the beginning of time. Well, what would happen if the spouse was not on the loan, they were not 62 when the loan was taken out? Time would come, they'd have to pay off the loan, refinance it, and sometimes they weren't able to do that. And so they might have to sell the home, and that was something the press got a hold of, and they started telling people a reverse mortgage is bad, it displaced the widow, and that's been changed. Yeah.
I've heard those, and they do kind of cause that negative.
Right.
So when you mention, reverse mortgage, to some people, to some of us, I myself have a very happy experience with reverse mortgage, but many of my friends and associates, when you mention it, there's kind of a negative. But boy, the things you're mentioning now have really turned those negatives around. It's really much more positive.
If I can get people to be open,
That's
to
amazing.
sit down and listen about this,
Yeah.
I know a lot of people have those feelings or misunderstandings. Typically, I turn them around. Now, again, the loan isn't for everybody. I'm not saying it's
That's
a
correct.
panacea for everybody's situation, but it's certainly something someone should really understand the true facts and be able to make a quality decision. The other thing that happened too with the recent changes is you could actually buy a home with a reverse mortgage if you're over 62.
Yeah, tell folks about that.
Treat it like a first mortgage. Basically, someone 62 could put down as little as 50%, finance all their closing costs. They'd only be out of pocket. I'm doing one right now. They bought a couple at 69 years old. Mm-hmm. They bought a $335,000 home. They're putting down $161,000. The only cash that came out of their pocket was $495 for an appraisal and $120 for a counseling fee, which is a required 45-minute session with a counselor, just to make sure that I'm not telling you something that is wrong or that you misunderstood what I told you. And they also explore all the alternatives that exist. And a lot of the alternatives aren't palatable. Sell your home, move to a smaller place, rent another home, borrow from friends or family, take in a boarder. A lot of these things are just not what people want to do. But anyway, they want to explore them, make sure you understand it. So these are all the things that are new about this home equity conversion mortgage. And admittedly, the acronym is not a good one. HECM, they call it. But leave it up to the government to come out with something like that. But the key thing here about this loan, all you have to do is be 62 or older. Mm-hmm. It has to be for your primary residence. You have to demonstrate the wherewithal to pay the home charges that I talked about, taxes, property taxes, insurance, HOA fees, and maintenance, and have gone through that counseling session. And that's it. That's it. So that's what qualifies you for home equity conversion mortgage. The amount of money you receive is based on a couple of things. Basically, your age. The older you get, believe it or not, you get more money.
Is that right?
Yeah. It's
so there's a benefit for us getting older.
There is some. Okay. There aren't a lot, but that's one of them. That's one of them.
Okay.
Okay. So basically, it goes up. A person that's 69, 70 gets about 57%. If you're 80, it might be up to 57. It's probably 62%. So that would be percent of the appraised value of your home. Okay. So what determines how much money you get? Your age, the interest rate, and of course the value of your home. They stop taking into consideration the value of your home when you reach $625,500. You could have a house worth more than that, but that is the cap.
That's the cap.
The cap. But still, that's a significant amount of money that you can have access to as either a lump sum, take it all at once, a stream of payments for the rest of your life, get X amount, $1,000 a month for the rest of your life.
Annuity. Yeah.
Annuity, like an annuity. You could get payments for a specific period of time. I'm 62. I'd like to take Social Security, but I know that if I wait till I'm 70 right now, I get 38% more in Social Security payments if you wait till you're 70. So you might take out this reverse mortgage for a fixed period of time, eight years, forestall taking Social Security so that you have more down the road. You could also put it in place as a line of credit. And it's a growing line of credit. It grows every month, the amount of money that you have access to, whether you take any money out or not. And that's something that needs explanation. I won't go into that now. I have one of those on my house. So I have this line of credit. I can within 5 days, get money put in my account. I never have to go to a bank. It's there. I can take it out. I can repay it at any time if I wish.
Do you get taxed on it, Mike?
It's tax-free. This is your home equity. There are no taxes associated with it.
So no taxes in.
No, absolutely
so
not.
that cash I get out of that home
is yours to keep 100%. So this is a fabulous program. People should truly understand what it might offer them. It does sound too good to be true. I understand that. It was meant to help people stay in their home, not have mortgage payments. You never give up title to your home. There really are no tax consequences. It's something you really should look at. It may change your life.
Tell me about the repayment, though. It is a loan, so I'm going to have to pay it.
True.
Either I or more than likely my family or my kids. What's the deal on that, Mike?
The deal is simple. Understand it's just a mortgage. You could pay it off at any time. But again, the rules are the loan will be called if you sell your house, of course. You'll need to repay the loan. Mm-hmm. If you stop living in that home permanently, more than 12 months, unfortunately, you may go, if you left the property or unfortunately went into a home more than 12 months. Or lastly, if you're deceased, the loan needs to be repaid. What will happen, just like with any other loan, you sell the home, pay off the loan, whatever money's left over is yours to keep or your heirs to keep, your estate to keep. Again, if for some reason the house doesn't cover the loan, insurance comes in, your estate, basically the house just gets signed over, the deed gets signed over in lieu of foreclosure, they call it, you're out of it. Although your family could buy the home, pay off the loan, refinance it, keep the home in the family if you wish.
Will my kids get stuck paying if the house doesn't sell at a price that will pay off the loan? I'm concerned about my kids, Mike.
No, this is the point. It's the point I mentioned earlier. It's non-recourse.
Yeah,
and this is the only loan like that. A conventional loan is recourse to your estate, meaning that they're looking to get paid whether you're live or dead. Your estate is being asked to pay the deficiency on that loan. This loan is insured. There's no deficiency judgment. Your legacy isn't diminished by having to pay this loan. That's why this is an awesome product. Yeah. And people, again, should really look into this, whether they take advantage of it now or later. One more thing I want to mention. Mm-hmm. People have the attitude, this is the loan of last resort. I mean, I did this for my mom. She unfortunately ran out of her savings. She wanted to stay in her home. This was the only thing that she wanted in her later years. We did a reverse mortgage for her. She got a stream of money that she could afford to stay in her home. Unfortunately, when she passed, we sold the house, paid off the loan, and distributed what was left to the kids, me and my two sisters. And that's typically what people think of this reverse mortgage. However, there are strategies now that we talk to financial planners where thought leaders, PhDs in economics have looked at retirement and said, you really should take out potentially this standby line of credit. And for those people that are called the mass affluent, those people that have money and investments and have income from other sources, you might coordinate taking money from your home equity over the years when the stock market's low. You take money from your home equity, let the stock market come back. Look what happened in the last few days with the exit from the EU in Great Britain. If you needed money right then and there, your market went down 6% in 2 days. This is what they're telling you to do. So there are financial strategies using home equity in concert with other investments to make those people that have $1 million or up to $10 million typically have a longer career, perhaps even add a decade to their savings, and increase the probability of success in retirement to the 90% range. And I've seen studies that show that. So again, this is something to be reckoned with. Please give me a call. I'd be happy to spend time with you, tell you all you need to know about the loan. Whether it's right for you or not, you should investigate it. It's worth it to you. So
it's a wonderful asset. Whether it's my situation was different, I saw that equity in my home, and I saw it as just sitting there. It was just money sitting there, and it wasn't earning anything for me. And so I took out that home equity reverse mortgage, and I've used that money to make money.
That's right. And That's certainly one of the options.
But it was different strategies, and so folks, everyone's situation is different, but it's best to deal with a professional, deal with someone like Michael who really knows and really wants to help people and will really be honest with you to look at whether this is a program for you. For many of us seniors, to me it was a blessing. It's just afforded me opportunities. For other folks like your mom, it gave her a sense of security. Everyone's purposes may be different, but working with someone like Michael, who really is a pro, is the way to go. Ask the questions. Don't be. Things have changed. It's improved dramatically over the years. Take advantage of at least learning and make an informed decision for yourself. Michael, how can folks get in touch with you?
It's really simple. I serve the Treasure Coast, Gold Coast, and Space Coast. Give me a call, 772-212-1450, or email me at michaelciardi@rfslens.com. That's MICHAEL. MCiardi, @rfslens.com.
Okay. Anything else, Mike? You've been wonderfully informative, and there's so much here. Any other point that you want to add at this stage?
As I said, it's really a 15 or 20-minute conversation would really give you all you would need to really decide whether it's worth more time to investigate or not.
Make an informed decision, folks. It's a pleasure, Mike. Thank you for joining us today. It's a pleasure having Mike with us and sharing really important information for seniors and also for younger people who have a senior in their life to know some of this information that Mike has shared. So I want to thank you for joining us today, and we wish you a wonderful day. Thank you all.
Thank you, Jack.